Good morning. It is January 31st. It's Wednesday, January 31st, 2024, about 9 a.m. on the East Coast, 3 p.m. Central European Time, 6 a.m. if you're on the West Coast of North America. We're getting back into these videos, getting back into the swing of things. This one's going to be a bit more concise. I'm going to talk about the Fed today, talk about some junior mining, talk about the Vancouver metals conferences I attended, some takeaways from those. So we're gonna jump right into it. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, at Goldfinger Capital on YouTube, and my Substack, Goldfinger Capital. Subscribe. If you're not subscribed to that Substack and you watch these videos, I really don't know what you're thinking. Even the free version is well worth the price of admission. $8 a month for the paid version. It gets you a lot of content. If $8 is going to stop you from the content I put out, then I guess you just don't really care about the market. Anyway, just saying. But I appreciate all of the people who have signed up so far. I appreciate everybody who watches these videos. I hope you get value out of it. And if you do, please hit the like button and subscribe below. So earnings reporting season is fully underway now. We had reports from Tesla last week, Microsoft last night, Google last night, AMD. I'm not going to delve into all those, but it seems to be the theme so far is selling on the news that, results are pretty good, but the bar is set so high just based upon the rally these stocks have had since end of October. I mean, Google, up big. Tesla was up big coming into the year. It's gotten chopped down to size here so far in January. And I could go through a bunch of charts, but a lot of charts have had big moves in the last couple of months, and we're seeing Google down in the pre-market. We're seeing Microsoft down a little bit too. Futures are down about 25 points on the S&P. Let's take a look at that. Yeah, so here's the earnings coming out yesterday after the close, and we're sitting basically right on the lows here. Futures 49.25 on the E-mini S&P is actually a big support level. I wouldn't want to see it get under that for very long. If it does, then this may end up having been a bit of a topping point there. But the ADP jobs report, which is the one that less people care about, definitely not as market moving as the non-farm payrolls from the BLS, but the ADP was like 50,000 light, right? And we're seeing in the last week or so, we're seeing lots of layoff announcements. PayPal, 2,500 jobs. UPS, 12,000 jobs. Lots of companies, 500, 600, 700, but it adds up. There's so many layoff announcements. When you add it up, month of January, like 50,000 layoffs have been announced across the U.S. I think this is probably going to cause Powell to be maybe lean a little bit on the dovish side in today's press conference. I generally think that the statement's going to be a yawn, and most of the press conference, he's going to be just kind of trying to say something by saying nothing, essentially. Just leave the door open for March, but not give too much hints. The Fed funds futures is 50-50 on whether there's going to be a March rate cut, quarter point cut in March. It's 50-50, like flip a coin. I don't think Powell wants to lean one way or the other yet, but who knows? He might inch a little bit onto the dovish side and send everything soaring again. People who don't think that the Fed is going to be cutting in 2024, I don't know what you're looking at. Inflation is basically down to target. I know the jobs market is allegedly strong, but every month is revised lower. Every single month in the last year has been revised lower. 500,000 net negative revisions to non-farm payroll. So whoever's doing these numbers is making them better than they really are, and then in the subsequent month or two, revising them lower. So really, the jobs market in the US is not nearly as strong as it's painted to be on the surface by government organizations that compile the data. You know, in the conspiracy world of 2024, we know to not just look at what's on the surface, right? We got to look beneath the surface. We got to think for ourselves. And I also think that the combination of the QT with the major budget deficits that the government is running in the US, probably on track for 1.8 to 2 trillion this year, they can't continue to reduce the balance sheet at the same pace they've been. So I think there's potential for the minutes. So from today's meeting, we'll get the minutes in February, and I think there could be potential that they will be discussing tapering. So dropping, reducing the runoff of treasuries on the balance sheet from 60 billion a month to 30 billion. And so if they put it out in the minutes in February, it'll probably be announced officially in the March meeting, and then the taper will start in April, right? So that's going to be a boost for financial markets. That should be a boost for gold. But we won't know today unless Powell drops a hint. If he drops that hint, then all bets are off. We could fly. But I think just generally, based upon this setup and how overbought stocks are coming into this earnings reporting season, I think more often than not, we're just going to see traders sell in the news. So even if the earnings reports are better than expected, unless they're substantially better than expected, they're just going to sell these stocks down on the news. Okay. Gold miners, that's a whole nother area to talk about in terms of how the market may respond to those earnings. I'm not going to get into that yet, but commodities. So it's interesting. Gold has been biding its time here in January, trading around this 2030 area, just gyrating. Yesterday, gold caught a bid. We caught some nice upside. This morning, it's even higher, up to 2,060 an ounce on the front month futures. I think there's a lot of things that are supportive tailwinds for gold here. I've talked about, you can look through my presentation from MIF, which is on this YouTube channel. I don't need to break it all down, but the fact that we're getting closer to that first Fed rate cut, the fact that all the things that are happening in the world are happening in the world. I don't love war as a catalyst for gold, but a confrontation, with Iran, between the West and Iran, that's a significant potential catalyst. Hopefully it doesn't happen. I don't think it's going to happen, at least not yet, but can never say never. And just all the stuff that's in play this year, including the elections in the US, just this tremendous treasury debt and deficit that is just spiraling out of control in the US, and just how the Fed cannot stay this tight. 5.5% on the Fed funds with the QT going, draining the balance sheet. This is way, way too tight. The pivot is coming. The pivot, if going to my head, it comes in March. Okay. I'm not 100% sure, obviously, but if I have to bet on it, I bet they cut in March. And if they don't cut in March, they cut in May. Copper, So that was one of the other metals, gold and copper, I talked about in Vancouver last week. Copper was 375 when I gave that presentation at Metals Investor Forum. Well, this morning it's 392. So that 17 cents a pound in copper is a big, big move. Okay. 5% move in copper is a big deal. So what's going on in copper? Well, here's UBS, just January 25th. Supply growth has been a key narrative for copper, but it's not actually happening. Producers like First Quantum and Anglo American are revising down their production guidance for 2024. All these mining companies are having challenges with their operations. In the case of First Quantum, public government just shut them down. In other cases, there's just various mining challenges with specific operations across the globe. So it's a tighter market. Tightness in the concentrate market and mine supply could translate into lower refined supply, increasing risk of greater scarcity than expected. So it just the stars are aligning here for copper early in the year. And this was a year that just 3 months ago in October, we were being told that copper was still in an oversupply, situation in 2024, and it wouldn't move into deficit until 2025. Well, it's now moving into deficit a bit ahead of time, a year early, and that deficit only stands to get larger in the years ahead, 2025, 2026. The world's going to increasingly need more and more copper, and the mine supply is just not there. The response from the producers is just not there. Okay, and so this looks like literally a major bottom was put in place a couple weeks ago at about 372 a pound, like a double bottom here. And this is a very nice, looking chart in copper on multiple time frames. It is making new 2024 highs here as I speak these words. So I love me some copper. I love me some gold and oil. Oil maybe it's not trading as well as it should, considering the risk with the Strait of Hormuz, Iran, and the Middle East powder keg, but it's in an uptrend here, right? It looks like it bottomed at the end of 2023 at about $68 a barrel. It's moving up. China, weak economy, Germany moving into negative growth, stagnation throughout Europe. So there's a lot of potential headwinds for the oil narrative, and it's trading pretty well. So, let's not get too greedy. I think oil is just fine here. Okay. And I like it. OIH was one I identified a couple weeks ago as a failed breakdown and made a nice long trade on oil services. Got like 8 up days in a row. And then yesterday, gap lower on poor earnings from one of the oil services companies. But anyway, it was great for a nice, rebound trade there for about an 8-day rally. So let's keep going here. So let's get into the juniors. So we talked about Tesla just cannot catch a break here in January. This chart has completely fallen apart. It's pretty battered and oversold. Might be good for a little bounce trade, but really the hits keep coming there on Tesla. Gold miners do not look great, okay, and not tracking the gold price well at all. Gold was up yesterday. The GDX was down. Just a lot of these big producers are having operational challenges, a lot of cost overruns, and that's just weighing on this. I mean, I heard Ross Beatty talk about this is the biggest disconnect he's seen in his career. 40 years in the gold mining industry. He's never seen the gold stocks trade this poorly, relative to the metal itself. So the contrarian would say this is an opportunity, but at the end of the day, these companies, these management teams have to get their act together and get the costs in line. Okay, we cannot continue to see quarter after quarter the cost to pull an ounce of gold out of the ground spiral out of control. So you want to really look at the financials. Are these companies spending more and more every quarter, or do they have a cost containment strategy? And really, if you're serious about investing in the sector, listen to the conference calls, and maybe even ask some questions on the call. See if you can get through. But just not a great look for the GDX. Simply stated, I can't really sugarcoat it. We did have some interesting trading on Monday and Tuesday across the sector in some of the juniors. So one of the juniors that benefited was Vizsla, Silver Explorer, big silver project in Mexico, very, very large, high grade silver project. And they got basically the allocation of this exchange traded fund to Vizsla went up because there was a change in the index that the SILJ is tracking. Okay, so there's a change in the index for the SILJ to track the NASDAQ Metals Focus Silver Index. And so a bunch of silver juniors got ejected from this exchange traded fund, and others got included, and also the allocation of the ETF to each stock went up. And so they received net buying. Vizsla was one of the ones that saw net buying. Dolly Varden was one of the ones that got ejected. So the ETF had to sell millions of shares of Dolly Varden in the last week or so. I mean, they might have done it all on Monday or Tuesday, which seems pretty dumb, but just based upon how DV had been trading coming into this week, it seems like somebody might have known that a switch was at hand here. And I blogged about it, just a short little blog post, free blog post on my Substack. So if you want to read more about that, I think Dolly Varden is a really nice opportunity here after it's dropped from 95 cents a share at the end of last year to as low as 62 cents at Monday's close, basically losing 30% of its value, largely to the fact due to the fact that the manager of this ETF changed, and the new manager decided to track a new index, which is rather silly, quite frankly. And I think Dolly Varden is one of the better silver junior explorers out there in the market. So check out my Substack. You can read more about that. Speaking of my Substack, one of the other things I've been talking about on there is Hercules Silver. So if you do the paid version of the Substack, you can watch a video I made about BIG.V and also read some premium content that I wrote about it. But basically, what has happened here in the last week is we're seeing some accumulation, and Hercules is moving out of this range, basically this 70 cent to 90 cent range it had been in throughout all of January. So basically, to recap, the company put out two pieces of news with updates on the drill results from the 2023 drill program. And now we basically received most of the holes. Now there's still some shallow holes left to be reported, but I don't think those are particularly consequential or market moving. The market, at least, with regard to BIG.V at this point is focused on the deeper copper porphyry, drilling. And seems some investors have digested it and realized that, okay, the fact that holes 8, 11, 21, 26 weren't as good as hole 5 is really not that big of a deal, because they were basically drilling blind in 2023, and they did not have the data and the understanding they do today. And now they're going to have a much, much, much better understanding and drill plan for the next phase of drilling this year. And in fact, it seems like it's very promising that this new 3D IP has really honed in on some high priority drill targets. And there were some clues left in the latest news on January 22nd. And I delved into that in that video that I published on Monday on my Substack. So it's nice to see this trading well. Technically, it looks very good. And it's basically at this point on the verge of invalidating this big island top, no pun intended. And I had mentioned in previous videos that the island top pattern is actually not a very a lot of traders make a big deal of it because it's kind of rare, but really these tops often don't prove to be tops. They don't hold up long term, and very often you'll see a stock move back in and fill this gap from the island top. So just because it's called an island top and it looks kind of cool on the chart doesn't mean the stock always has to crash down to zero. Okay. And in fact, very often it can do what Big is doing right now and move back up and start to squeeze those shorts. And there is a pretty hefty short interest in Hercules. I don't know who the shorts are or why they would be shorting, but a very good possibility that they're about to get squeezed or they're getting squeezed. So anyway, what else about this Vancouver, resource conferences that I attended? Well, number one, the Metals Investor Forum was the best turnout I've ever seen. I think I've been to 5 of them now, 4 or 5 of them. The Saturday morning, at the time I spoke, the room was packed. Never seen that on a Saturday. So that's a very good sign. VRIC was expecting like 5,000 or 6,000 attendees. They ended up getting 9,000 total. That's 50% above forecast. Now, a contrarian will say, oh, high conference turnout, that's a negative sign. I really don't think so. This sector is so starved of capital. It needs more interest. It needs more attention from investors. And I really think there were a lot of new investors or relatively new investors at some of these conferences. And I think overall, the mood was quite positive. I think people are getting that the resource sector is really the most undervalued area of the entire stock market, and it's something that like people get the copper story, like they get that long-term thesis for copper. They understand it, and they understand that mining copper is a very complicated, sort of endeavor, and it takes a lot of time and a lot of money. It's not like that supply is just going to turn on in a year or two. It's going to take a decade, and that's if we start investing now. And they're not investing. Companies are not investing. They're not building new mines. They're not getting the mega projects that we need. They're not getting them permitted. So overall, I think it was very positive. I'm just going to mention 4 companies from Vancouver that really stood out. The mood around AE.V, which is American Eagle Gold Corp, was very positive. I actually went to dinner with a bunch of investors and just very, very positive on this company. The results of drilling in 2022 and 2023 and the promise of 2024, that they've got more data than ever. They've just maybe, in a few of their holes from this last year, they just missed some more, I guess, high value or high priority targets. And now with a new updated IP and all the data they have from the 17 holes that they've drilled in the last 2 years, the 2024 program should definitely be pretty exciting and quite promising. Silver. So I met with the CEO of this company, and I was just reading through the company's last few pieces of news, and this project that they just recently acquired really stood out to me as holding a lot of promise. So Reyna is on my radar. They're also using AI to help them with targeting. And that's a very interesting angle on the story. I will point out that the chart looks pretty awful, and I don't know how much cash they have left, but I don't think they have enough to drill this year. So there is probably a financing coming here in Q1 or Q2. So those are the negatives on it. But overall, I think this is one to watch and put on your radar, and I definitely have. This is another one, PGX. So this is the Sullivan 2.0 story. Sullivan was that big, SEDEX deposit in BC that operated for like 100 years, was very high, like 12% lead zinc with, I forget, 50 grams silver or something like that. Very impressive, long-lived mine. So they're in the neighborhood. They're in the right neighborhood to find another Sullivan. And there was a lot of buzz on this one in Vancouver. So you can see, it's moved up and it's sold off a little bit the last few days, pulled back a bit. But I think this is also one to put on your radar, especially for the summer, when they get out there to drill. And the other one is Ridgeline, RDG on the venture, the Big Blue project. So I think this one is also, very much under the radar, trading at 11 cents, just being down. So it looks like the Reyna Silver chart, kind of just sort of flat on its ass. And they're probably going to have to finance in Q1 or Q2 as well. But this Big Blue project, I talked with some other investors, definitely some eyes on this. And a lot of people want to see this one drilled. I don't know why this is not loading for me right now. Well, anyway, you can look for yourself, but this is basically a porphyry project in Elko County. Good place to do some exploration and maybe find a new mine. But there's a lot of smoke here, and just like rock chip, highlights 6.44% copper, 4.88% copper, 6.31% copper. And it seems kind of like a no-brainer that you would drill a hole sort of just right under this Delker mine, and that's proven out by IP as well. And then you have this whole corridor that actually leads to one of Reyna Silver's projects. Okay, so the setting for this project, the setting is quite ideal for finding a porphyry. So they will need to do some work on that this summer and hopefully drill it this year. Obviously, that all depends upon financing, but these are beautiful rocks that they just found in an old adit in the mine dump. Copper skarn, malachite, garnet, beautiful rocks. And they're just sitting there because the mine only existed for like 2 or 3 years and then it was shut down and left to be part of history. So anyway, those are 4 that definitely got on my radar or got even more on my radar in Vancouver. Definitely some buzz there. And especially in the case of Reyna and Ridgeline, you've got 2 companies that are super under the radar, valuations very, very low at these levels. And if they catch some joy during 2024 drilling, could have a nice move. Okay. So that's it. That's it from this video. I think I hit on everything. Get back into doing these once a week. Maybe if I have something really urgent to say, I'll do it even more frequently. So I hope you have a powerful trading day, and I hope you own some copper. I'll see you next time. Thank you.